What's up, everybody? So one of the main questions now is, do I invest now or should I be investing now? The stock market keeps going down, and if I invest now, is it going to go down some more and then I'll lose money? And so do I pull the money I have so I don't lose anymore? Or should I just spend all my money buying stocks now since they're down and then make millions when they rebound? This is even more so important now since most people will be getting their stimulus payment soon, and you guys may be wondering, should I just invest all that money? So if you guys are trying to find the answer to any of those questions, I'll be showing you what you could and what you should be doing. Now, before we even go any further, let me just say a very big thank you to my viewers and my subscribers. Thank you guys for tuning in to the channel once more. I really appreciate the likes and comments, and as always, it's very good to hear what you guys are thinking about when you watch my videos. Now, if you're new here and this is the first time you're seeing me, my name is Ian, and on this channel we talk about personal finance, stocks, and making money. So with that said, give this video a thumbs up. I really appreciate it, and be sure to consider subscribing to this channel so you can see weekly content, and I post videos here on YouTube several times a week. So guys, let's just look at the stock market situation right now. So as you can see here, this is what we are currently going through, right? Ups and downs and ups and downs. But if we look a little further out, we had a pretty sharp drop here. And then if this is nothing new to you and you've been investing or following the stock market for a while, then let's go out a little further. And now we can see this very steep sudden drop right here. So, I mean, at first glance, it looks really, really, really bad. Now, like they always say, you have to buy the stocks low and sell them high. And that's how you make money in the stock market. And if we use history as an indicator, then we can say that this sudden market drop is going to be temporary. And when I say temporary, I mean it won't last forever, right? But with that said, we just don't know when it's going to stop. Now, if anyone tells you that the stock market will be back in 5 days, 10 days, 2 weeks, 2 months, or just any time, it's impossible for them to know that. You just can't know. And if you don't know, then that brings in the confusion, the doubts, and the questions. Now, I watch a lot of YouTube videos, right? And one of the first places I go to, or even while I'm listening to the audio, I go to the comment section. And now it seems like everyone is saying, okay, the market is low, so we need to buy now. And don't get me wrong, if you do this, you're probably, well, not probably, most likely you'll make a lot of money at the end of this, right? But it's not just about buying low now because stocks are cheap, as many of the companies affected by this economic downturn, I mean, although they may not go bankrupt, it won't take them simply 3 months to bounce back to where they were before. I mean, let's face it, it may take a year or even longer. And soon enough, they are going to be releasing their financials for the quarter or the next quarter. And most likely, a lot of them will still be in the red, which can still mean that their stock prices will tank some more, or after a slight rebound now or soon, will tank again before they actually get back to where they need to be. So you may see the market going up now and think, oh man, I just don't want to miss out. And then in a couple days or weeks, you may then see the true picture of the financial mess that some companies are in. And then their stock price just ends up being much lower than what it is right now. So with that said, what do you do? Do you invest now? Is this a time to finally forget about the toilet paper? And instead of hoarding toilet paper, should you just load up on some stocks and just buy them all so no one else can have any? Well, that wouldn't be nice. Now, before I answer that, there's a safe way to go about this, guys, right? Now, the main reason why the market is tumbling is because of the COVID-19, or more popularly known by tourists as the bear virus. Now, the virus doesn't attack the New York Stock Exchange, right? I mean, when we say we're in a bear market, there isn't a literal bear going around and chasing the traders and analysts at Wall Street. But because of the virus, people get sick, they can't do their jobs, businesses close, production slows, demand for services and goods goes away, and the ripple effect is that businesses just don't make as much money anymore. And then all these businesses are in the stock market. So Do you exit and try to save yourself, or do you just buy more stocks? Now, historically, if you pull out of the markets while they're going down, you lose. If you purchase while the market is going down and then you pull out before it goes back up, then also you lose. You can't predict when the market will go up, so you invest what you can safely. Now, before we go investing here, there's one main thing that we need to have, and that's called an emergency fund. That's the stash of cash you have around for when your business slows down, or in the event you are jobless or without income for some time. This one is very important because looking back at the last recession, the majority of people who pulled out of the stock market while it was down didn't do so because they just wanted to lose all their money. Surely, no one would want that, but they had no other choice. They needed the money. I mean, think about it this way. You have $10,000, right? You need, let's say, $2,000 to survive in the event that you lose your job or you have no income. You want to then keep at least $6,000 for at least 3 months of expenses until you can get some income coming in. Now, if you spend, let's say, $8,000 of that 10 and the market doesn't bounce back in a month or two, then you're out of money and then the bills come rolling in. If the market dropped even further after you invested, then that 8 or 10K would now be worth much less. So now you'll have to pull that money out and you'll get less than what you put initially. So for that reason, the emergency fund must be done. No questions asked and with no excuses made. So until you have that emergency fund, the simple and short answer to the question here is no. You should not be investing. The first thing you should do is to create that emergency fund for any uncertain times that may be lurking ahead. Now, if you have that emergency fund, or once you get there, here's how you should approach the markets. So there are 3 things that we do know. So our decisions should be made based on these 3 things. So number 1 is the market is going down. This means that we can get stocks on a huge discount. The second thing we know is, unfortunately, none of us can tell when the bottom end of the market, or where the bottom end of the market is, rather. Now, the third thing we know is that unless it's the end of the world, then the stock market will go back up. So, to safely invest and get the best rates on stocks, here's a method you can use to purchase. So you can buy some stocks now. Don't go too crazy, just buy a little. You watch the market for a few days and see what they do. You also need to keep up with what's happening, since we know that the main reason the market keeps plunging is because of the bear virus. The more bad the virus does, then the more you can expect the market to plunge. Now, we're buying a little here because we're going to buy some more in a day or a few days. Then stock prices could be lower. Now, if things keep getting worse, you keep buying a little more and you continue buying until the rebound comes. What this does is it gets you the average price paid for stocks as close to the bottom as you can get to safely without risking purchasing stocks when the market did not fully drop. So instead of using all your funds to purchase stocks now and then see the market drop potentially 30% more and then lose out on more shares, you can follow this strategy. Now, this strategy has worked for me, and over the past few weeks, I can say I'm happy I didn't go crazy after the first day or first couple days when the markets went down, because even then, many of us, including myself, didn't know that the Dow Industrial Average would have gone below 20K. Now, dollar cost averaging is another way you can invest, which really ends up making you money in the long run without worrying about timing the market as well. So that's the way you can do it. So should you be investing now? Yes, you should always be investing. What do you guys think about this strategy? Let me know in the comment section down below. Also, if you guys are using any other strategies to invest right now, I would love to hear what they are and how they've been working out for you. So do comment them down below and let's hear it. Now, if you aren't already investing, or even if you are, here's a very easy to use investment platform that will give you up to 2 free stocks that can be worth over $1,000. Click on the link below to Webull, which is an easy to use investment platform. Sign up with the link I provided and collect your 2 free stocks. All right, guys, thanks for tuning in again. All the best in your investments, and until next time, adios.